The top 1% of wealth holders aren't just lucky. They employ carefully crafted investment strategies that set them apart from the rest. So, what are these strategies and how can you incorporate them into your own financial planning? Let's find out. First and foremost, diversification is key. The wealthiest investors spread their investments across a range of asset classes, including stocks, bonds, real estate, and alternative investments like private equity and hedge funds. This diversification helps mitigate risk and optimize returns over the long term. Diversification isn't just about spreading investments across different asset classes. It's also about diversifying within those asset classes. For example, within the stock market, the wealthiest investors allocate their capital across various sectors, industries, and geographical regions. This approach helps them hedge against sector-specific risks and capture opportunities in different market segments. The wealthiest investors understand the importance of asset allocation based on their risk tolerance and investment objectives. While stocks offer potential for high returns, they also come with higher volatility. Bonds, on the other hand, provide stability and income, but may offer lower returns. By balancing these asset classes within their portfolios, investors can achieve a risk-return profile that aligns with their financial goals. Real estate is another cornerstone of diversification for the wealthiest investors. Beyond residential properties, they diversify into commercial real estate, rental properties, and even real estate investment trusts, or REITs. Real estate not only provides a steady income stream, but also acts as a hedge against inflation and a tangible asset with potential for appreciation. Alternative investments like private equity and hedge funds play a crucial role in diversification for the wealthiest investors. These vehicles offer access to unique opportunities, such as early-stage companies, distressed assets, and arbitrage strategies, which may not be available in traditional markets. While alternative investments come with higher fees and liquidity constraints, they can enhance portfolio diversification and potentially boost returns. Diversification across asset classes and within those classes is the cornerstone of successful investing for the wealthiest 10%. By spreading their investments across a wide range of opportunities, they not only mitigate risk, but also optimize returns over the long term, laying the foundation for sustained wealth accumulation and financial success. However, diversification alone isn't a guarantee of success. The wealthiest investors know that staying ahead in the ever-evolving financial landscape requires more than just spreading their investments across different assets. They also employ active management strategies to navigate changing market conditions effectively. Active management involves continuous monitoring of portfolio performance, economic indicators, and geopolitical developments. By staying informed and vigilant, investors can seize emerging opportunities and adjust their positions to mitigate potential threats proactively. Moreover, the wealthiest investors recognize the importance of flexibility in their investment approach. They understand that markets are inherently unpredictable, and strategies that worked in the past may not yield the same results in the future. As such, they remain adaptable, ready to pivot their investment strategies in response to changing circumstances. Active management extends beyond asset allocation to individual security selection. The wealthiest investors conduct thorough research and due diligence to identify undervalued assets with high growth potential. They aren't afraid to deviate from the crowd and invest in contrarian opportunities that others may overlook. Risk management is also a central component of active management. The wealthiest investors employ hedging strategies such as options and derivatives to protect their portfolios from downside risk. By hedging against potential losses, they can preserve capital and navigate turbulent market environments with confidence. Active management complements diversification by enabling investors to capitalize on market opportunities and mitigate risks effectively. By staying proactive, adaptable, and disciplined in their approach, the wealthiest investors set themselves apart, and achieve superior long-term investment results. Successful investing isn't just about setting and forgetting. It's about actively engaging with the markets, staying informed, and making strategic decisions to maximize returns and protect capital. Timing is indeed paramount in the world of investing, and the wealthiest 10% have honed this skill to a fine art. They possess an acute understanding of market cycles and use a combination of economic indicators, technical analysis, and fundamental research to determine the optimal timing for entering and exiting investments. Economic indicators such as GDP growth, inflation rates, and employment figures provide valuable insights into the overall health of the economy. The wealthiest investors closely monitor these indicators to gauge the direction of markets and identify potential turning points. Technical analysis is another tool in their arsenal. By studying price movements, volume patterns, and chart patterns, investors can identify trends and patterns that may signal opportune moments to buy or sell assets. Whether it's support and resistance levels or moving averages, technical analysis helps investors make informed decisions based on market dynamics. Fundamental research is equally crucial. The wealthiest investors delve deep into the financials of companies, assessing their growth prospects, competitive advantages, and management quality. By conducting thorough due diligence, they can identify undervalued or overvalued assets and position themselves accordingly. The wealthiest investors understand the importance of patience and discipline when it comes to timing. They don't succumb to FOMO, fear of missing out, or panic selling during market fluctuations. Instead, they stick to their investment thesis and wait for the opportune moment to execute their trades. Timing is a skill that can be developed through a combination of economic insights, technical analysis, fundamental research, and emotional discipline. By mastering the art of timing, the wealthiest investors maximize their investment returns and minimize their risks, ultimately solidifying their positions at the top of the wealth pyramid. Timing isn't just about luck, it's about strategy and execution. By incorporating these principles into your own investment approach, you can enhance your chances of achieving financial success. Patience is indeed a virtue revered by the wealthiest investors. They embrace a long-term perspective, recognizing that true wealth accumulation is a journey that unfolds over time. Instead of chasing short-term gains, they maintain a steadfast focus on their overarching financial goals. In a world where instant gratification often reigns supreme, the wealthiest investors understand the power of patience. They remain unfazed by the day-to-day noise of the markets, knowing that temporary fluctuations are part and parcel of the investing journey. Patience enables investors to weather market downturns and capitalize on long-term opportunities. Instead of reacting impulsively to market volatility, they maintain a disciplined approach, staying the course even when the going gets tough. Patience also fosters disciplined decision-making. The wealthiest investors adhere to their investment strategy, resisting the temptation to deviate from their carefully laid out plans. By staying true to their principles, they avoid impulsive actions that could derail their long-term objectives. In essence, patience isn't just about waiting. It's about having the resilience and fortitude to stay committed to your financial journey. The wealthiest investors understand that Rome wasn't built in a day, and neither is wealth. By cultivating patience, they lay the groundwork for enduring financial success. Remember, patience is not just a virtue, it's a key ingredient in the recipe for wealth accumulation. Stay patient, stay disciplined, and stay focused on your long-term financial goals. Another critical aspect of success for the wealthiest investors lies in strategic asset allocation. They understand that how they allocate their capital across different asset classes can significantly impact their overall portfolio performance. Therefore, they meticulously tailor their portfolios to reflect their unique risk tolerance, investment objectives, and prevailing market conditions. Strategic asset allocation involves determining the ideal mix of assets, such as stocks, bonds, real estate, and alternative investments, to achieve a balance between risk and return. The wealthiest investors take a holistic approach, considering factors such as their time horizon, liquidity needs, and tax considerations when crafting their asset allocation strategy. Strategic asset allocation enables investors to capitalize on diversification benefits while aligning their portfolios with their financial goals. By spreading their investments across a range of assets, they can reduce overall portfolio risk and enhance potential returns over the long term. Furthermore, the wealthiest investors actively monitor market conditions and economic trends to adjust their asset allocation strategy accordingly. During periods of economic expansion, they may tilt their portfolios towards growth-oriented assets like stocks. Conversely, during economic downturns, they may increase exposure to defensive assets like bonds and precious metals. Ultimately, strategic asset allocation is a dynamic process that requires ongoing evaluation and adjustment. The wealthiest investors continuously reassess their portfolios to ensure they remain in line with their evolving financial objectives and changing market dynamics. Finally, a hallmark of success for the wealthiest investors is their unwavering commitment to education and continuous learning. They understand that the financial landscape is constantly evolving, and staying informed is paramount to staying ahead of the curve. They immerse themselves in a plethora of resources, from market research reports and economic publications to industry journals and educational seminars. By staying abreast of market trends, economic developments, and emerging investment strategies, they arm themselves with the knowledge and insights needed to make informed decisions. The wealthiest investors actively seek out mentorship and guidance from seasoned professionals and industry experts. They understand the value of learning from those who have walked the path before them and are eager to leverage their wisdom and experience to accelerate their own learning curve. They embrace a growth mindset, constantly challenging themselves to expand their knowledge and skill set. Whether it's mastering new investment techniques, exploring emerging markets, or understanding the impact of technological advancements, they remain curious and open-minded in their pursuit of excellence. Continuous learning isn't just about acquiring knowledge, it's also about honing practical skills and adapting to changing market conditions. The wealthiest investors actively apply what they've learned, experimenting with new approaches and refining their investment strategies based on real-world experience. In essence, education is the foundation of success for the wealthiest investors. By prioritizing continuous learning and staying informed about market trends and investment strategies, they position themselves for long-term prosperity in an ever-evolving financial landscape. Remember, the journey to financial success is a lifelong pursuit. By committing to continuous learning and personal growth, you can unlock new opportunities and achieve your investment goals. In conclusion, the investment strategies of the wealthiest 10% are built on a foundation of diversification, active management, timing, patience, strategic asset allocation, and ongoing education. By incorporating these principles into your own investment approach, you can increase your chances of achieving financial success. Thank you for joining me today. Don't forget to like and subscribe. Until next time, happy investing.